What is up, guys? Logan here again. The last couple of days we've taken a beating in the market, but I've been keeping my mind right, my mental health, physical health, and everything like that. So I just wanted to hop into this video. Let's make one on like proper risk management, because I know a lot of people, especially in the Discord, have been asking me, like I've blown up my account, or how do you, Logan, keep yourself from blowing things up, and how do you seem to, even though you take thousands of dollar losses and thousands of dollar wins and hundreds and all that, like how do you manage it? I want to talk about that in this video. Make sure you join the Discord if you haven't already. We have 750 members in the free one. Then I also started a premium one for people who want more one-on-one help. I do weekend classes, I do exclusive callouts. Lena does all her callouts there, and we try to help everybody one-on-one. So make sure you join that premium Discord. It's just 30 bucks a month, and we're super excited, just to launch that. There's so many awesome things that come with it. You can voice chat with me one-on-one on the weekends when I run some classes. We'll teach technical analysis, we'll teach everything like that. So if you ever wanted a more personalized Discord experience, there's always that way. And the other Discord's amazing too. You guys are seriously awesome. I'm so happy that you guys are learning. There's everything to it. It's just really just blowing my mind. So let's talk about proper risk management. We'll get into all of that, and I'm super excited for this one. So let's look at this quick key takeaways from Investopedia, because we're going to talk about stop losses first when it comes to risk management. So most investors can benefit from implementing a stop loss. Stop loss is designed to limit an investor's loss on a position that makes an unfavorable move. One key advantage of using the stop loss: you don't need to monitor your holdings every second all the time. It's also like the short-term price fluctuation could activate the stop and trigger an unnecessary sale, which has happened to me. I've had both things happen, to where I hit a stop loss and I got out and was happy because I could have lost hundreds more. And then I've also had times where I hit a stop loss when I was down maybe 100 or whatever percent. Usually I set mine at 15% if we're playing short term, but if we're playing long term, like most of my positions are, I'm cool with writing those down, even down 30%, for the chance to come back to break even. That's just my personal risk management level there. So those are some of the key takeaways. The one thing that I do to maximize risk management is to never buy a weekly contract. You won't see me buying weekly contracts ever. I don't really do that. That's not my thing. I at least go 2 weeks out for a minimum on my expiration. So if we were to look at my positions today, you guys would see that I'm in all October positions, and I even picked up Apple today on the dip. I bought Apple at 116 for a premium, it's an October 2nd call, which I can pull up, but I'm currently down about 20% on that position because they dropped to 113. Now they're coming back up to 114, so I can handle that short-term fluctuation in price when I purchase Apple for, a 115 call for October 2nd. So you take whatever your position is, you look at the long term, and then when you set stop losses and limits, you have to know how much you're willing to lose. And that's one thing I wanted to talk about in this video that I'm happy that we just covered. I would focus less on the dollar amount and more on the percentage, because there's a lot of people, who see big gains, who are like, they see someone make $3,000 in a day, and they want to do that too. But the thing is, you have to be playing with a big amount of money. Focus on your percentages, right? So if you put $2,000 down on an option call and you have a 10% return, that's a $200 return. Because if you focus more on the percentages, it's easier to find your stop losses. It's easier to take losses and know, like, okay, I'll regroup, we'll make that money back. And it's good that I hopped out so I can put that money somewhere else, maybe a better position even on the same stock at that point that you hit your stop loss. See, and what I condone the most too is always to, if you hit your stop loss, you can take a break from trading, you can look for other potential setups, because our technical analysis isn't right all the time, especially when the market's fueled by fear or by greed. Both of those things can really change your technical analysis. And you also don't want to get super emotional, because what happens is when you see your trades down 20% and you sit there in your head going back and forth like, okay, I'm at my 20% stop loss because I only have this contract for another week and a half or 2 weeks. And when you're at that spot and you're looking at your thetas, they're not matching up as well, that's when you start to get emotional, and you either make a short-term irrational decision, or you continue to hold it and you watch your money go further down and further down and further down, which is another position you do not want to be in. And then if we talk about last week, I traded Apple on Friday after cutting some losses for my September expirations. On Friday, because we have a big downswing in the market, what I ended up doing was I day traded Apple really quickly. And what I did, I was up about $200 and I had it set to where if Apple fell to where I was only up $100, then my contract would sell. So I put that in, boom, it fell, it was up 100, sold, then it went back to where I would have been breaking even again. And then I re-entered because the charts looked good. I scalped another like 80 or so out of that play and then sold there and said, you know what, I'm really happy that I didn't let it just ride down, because I would have missed out on some of my gains. So it's a great way, you know, trailing stop loss, it's a great way to secure profits so that if something does dip, you have a chance to make money. And that's what's really cool, is especially in a time like now where I think the market's gonna consolidate throughout this week. And this is, you know, today's September 8th. So the market's gonna continue to consolidate, I think, because of how up and down it's been. I think we're gonna find some sideways movement, which is a lot of what I've seen today. I'm really curious to see how we continue to move throughout the next month, and that's why I chose further out expirations. Even though they cost a little bit more on the premium, they will save you a lot of stress. I was able to go and do my normal things today, like run to the bank and, you know, go to the grocery store if needed. Anything that I do, and I didn't have to sit and watch my phone and be nervous about a $20, $30, $100, $200 movement, because I know I have longer expirations, I can let profits ride, and then if anything does get too ugly and my Greeks start to look bad, that's when I'll decide to hop out of a trade, hop out of a play. So it's been a little tough these last couple of days. We've been weathering the storm together in the Discord, but also just all of us mentally after the end of the day. So that's one other thing that's really cool that stop losses allow you to do, is pop you out of a position, and now you don't have to think about that as much anymore. So I'm currently rolling with some Starbucks, some Apple, plays like that right now in my portfolio. The main disadvantage of a stop loss is that a short-term fluctuation in the stock's price could activate the stop price. And this is what happens too. You know, some people will set a 10% stop, and you know, maybe they bought on a green candle, it seemed to have mounted the VWAP, but no, it actually went the opposite way. And when stocks fall through the VWAP line, which we've talked about before, they seem to sell off pretty hard. So maybe that was you made that play, you hit your 10% stop, your 15% stop, you hopped out, and out of nowhere, it mounts the VWAP on the next go around and takes off. And that, I would say, happens so rarely that just sticking to your stop loss, getting used to taking losses, and knowing that now, and you know, you had $500, you took a $100 loss, or even $150. Now you have $400 or $350 to move somewhere else to make you more money, make that back, instead of riding that $500 down to $100 and then trying to find a play and then messaging somebody and saying, hey, I just blew up my account. How can I get my $4,000 back? When the best thing that could have happened when you were at 5,000 in your account was, hey, I just lost 1,000, I'm working with 4,000. What's the best way that I can turn this back into 5? And that's a lot more manageable. You know, if you want to knock it out of the park with trading, you really got to focus on the percents and not the dollars as much. Because like I said, you could throw $1,000 somewhere and a 10% return will bring you $100 back. And I know that you see these trades where people are hitting like 5,000, 10,000, all these crazy gains, you know. And that's the one thing I think it's more realistic for you guys to get there if you start by building small percentages, learning technical analysis charts, stuff like that is just more realistic. And then when you lose on trades, you have a reason for it, instead of just like you throw your money somewhere and you just watch it drop, or vice versa. Even if you watch it go up, then you really don't have much of an exit strategy. So it's good to set goals, and anytime that I've made money, it's because I've set a goal that I've wanted to hit and I was able to hop in, hop out of something. That's the other thing too, like I said earlier, if you get emotionally attached to what you're trading, that's where you can make some irrational decisions, some short-term, short-sighted decisions, to where you're watching your money go up or down really quickly, and without a goal, without an exit strategy, it can really do damage to your portfolio. So that's the other thing too that I really wanted to touch on. But you know, just make sure that you know what you're willing to lose. And there's some times too where you can't control, right? When you swing a play, how much you're gonna lose. Maybe you're only down 4%, you swing something into the next day, the stock's down $10 more, and all of a sudden you're down 40%. And you were like, oh shoot, my stop loss was at 20, but since it didn't open until the next morning, then you can take your loss, you can jot that up as like, okay, maybe next time I don't swing this play, I wait to see what it looks like at open, and then I enter again. So that's another way to look at it. And don't worry, I've been getting clobbered, absolutely clobbered in my portfolio as well. I mean, like I said, Tesla destroyed, Apple was like 131, now it's back down to like 112. So don't worry guys, I have all these shares of companies that have also gone down a lot in the last 3 days. So it's not like I'm immune to losing money. I hit stop losses and stuff like that. And I have other positions where I'm just down a lot. So I really wanted to really stress that to you guys, that it's really important to just manage your risk in trading, because you can get really discouraged when you blow up accounts and blow up positions. Like I said, take $700 losses, take $1,000 losses. You know, it's cool if you know what your risk is. Like if you have 5,000 and you have a 20% stop loss, that's $1,000. And maybe that's what you're looking for when you gain money too. But even if you're playing with smaller plays and you have $200 and it drops 40 or goes up 40, then you could look at a potential exit, because that's super important too. That's gonna be it for me today. I hope you guys learned something in this video. If so, make sure you leave a like. Don't forget to subscribe. We're almost at 1,200 subs. Don't forget to check out the Discord links, but I really mean it. You guys have just completely been the best. I can't even really put into words how I feel. Like YouTube has just been amazing. The community's amazing. You guys already know that. So just make sure that you guys remember that no matter how scary trading gets, that even someone like myself, who's an experienced trader, I've been trading for a while, especially options, help a lot of you guys out. I sometimes lose money. I get, hit stop losses. And it's just the name of the game, Sometimes earning plays don't go the way you want it to, and that's just the name of the game. It's really just how it goes, but it's up to you to control your emotional management. People will trade emotionally if it's money they're not willing to lose. That's part of investing. You're willing to lose this money, but you're also willing to make it more. Just make sure you can manage your risk properly, and then you can always ask questions in the comments. It really means a lot. But that's gonna be it for me today. If you have any other questions, don't forget to reach out. But I will see you guys in the next video, so stay frosty.